Welcome aboard, fellow navigators. You're watching Crypto Navigator, and if you haven't yet, make sure to click that subscribe button for weekly insights into cryptocurrency. Stay ahead of the market with us. Today's topic is very interesting, so let's get started. Understanding Bitcoin ETFs. Exchange-traded funds, ETFs, are a type of financial product that investors can buy and sell on stock exchanges similar to stocks. Unlike individual stocks, which represent a stake in a single company, ETFs are comprised of a basket of different assets. These can include stocks, bonds, commodities, or a mix of asset types. Bitcoin exchange-traded funds, ETFs, are such investment funds. These funds provide a way for investors to gain exposure to Bitcoin's price movements without the need to directly purchase or hold the cryptocurrency. This approach simplifies the investment process, removing the technological and security challenges associated with buying and storing Bitcoin. Essentially, when you invest in a Bitcoin ETF, you're buying shares in a fund that, in turn, invests in Bitcoin, offering a regulated and more accessible path to Bitcoin investment for traditional investors. Also, read Bitcoin reaches new all-time high. Here's what driving its growth. Historical context and the catalyst for Bitcoin ETFs. The introduction of Bitcoin ETFs has often been compared to the launch of gold ETFs. When gold ETFs were introduced, they significantly simplified how investors could gain exposure to gold prices without physically owning the metal. This innovation led to increased liquidity and interest in the gold market. Similarly, Bitcoin ETFs are expected to provide an accessible way for a broader range of investors to engage with Bitcoin, potentially increasing its liquidity and integrating it more firmly into the financial system. The journey towards Bitcoin ETF approval. The road to the approval of Bitcoin ETFs was long and filled with challenges. 1. It began a decade ago with the Winklevoss twins filing the first application for a Bitcoin ETF in 2013. However, this initial attempt, and many that followed, faced rejection from the SEC due to concerns over the market's regulatory standards and the nascent state of cryptocurrency infrastructure. 2. Over the years, despite continuous rejections, the push for Bitcoin ETFs never waned. 2. The SEC's concerns primarily revolved around issues such as the risk of market manipulation and the adequacy of investor protections. 2. The Commission also expressed reservations about the Bitcoin market's size and the custody of Bitcoin, highlighting the importance of ensuring that the risk associated with ETFs should only pertain to the value of the underlying asset, not the risk of theft or disappearance. 3. The landscape began to change as the cryptocurrency market matured, and financial institutions developed more sophisticated mechanisms to address the SEC's concerns. 3. The launch of Bitcoin futures ETFs marked a turning point, indicating the SEC's growing comfort with cryptocurrency-related products, albeit still cautious about direct exposure to Bitcoin through spot ETFs. 4. In a historic decision in January 2024, the SEC approved the first spot Bitcoin ETFs for trading in the U.S., marking the end of a long journey that began over a decade earlier. 4. This approval was seen as a milestone for the crypto industry, reflecting a significant shift in regulatory attitudes and potentially paving the way for broader acceptance and integration of cryptocurrencies into the financial system. 5. This breakthrough came after a series of rejections and legal challenges, including a notable lawsuit by Grayscale against the SEC, which ultimately led to a court ordering the SEC to review its decision. 5. The approval of spot Bitcoin ETFs by the SEC is expected to provide investors with direct exposure to Bitcoin without the complexities of managing cryptocurrency wallets, thereby increasing Bitcoin's accessibility and appeal to traditional investors. The importance of Bitcoin. ETFs for Bitcoin's growth. Bitcoin ETFs, exchange-traded funds, mark a significant evolution in the accessibility and investment appeal of Bitcoin, offering both direct and indirect benefits to Bitcoin's growth. 1. Enhanced accessibility. For investors hesitant about the complexities of handling cryptocurrencies, such as managing wallets and keys, Bitcoin ETFs offer a straightforward avenue to invest through traditional brokerage accounts, eliminating the need for technical know-how. 2. Institutional investment. Bitcoin ETFs attract institutional investors, contributing to market maturity and stability. Institutions can now participate in the Bitcoin market without dealing with the security and regulatory concerns of holding actual Bitcoin. 3. Market liquidity and price discovery. With more participants able to easily invest in Bitcoin, ETFs improve market liquidity, leading to more efficient price discovery. 3. This could potentially reduce volatility in the long run. 4. Regulatory endorsement. The approval and launch of Bitcoin ETFs signal regulatory recognition and acceptance, which is likely to boost investor confidence in cryptocurrency as a legitimate and viable asset class. 5. Broadening investor base. By offering a regulated investment vehicle for Bitcoin, ETFs make it possible for a wider range of investors to gain exposure to Bitcoin's price movements, expanding the investor base beyond crypto enthusiasts. This is your captain signing off. If you enjoyed our crypto journey today, make sure to hit that subscribe button and join us again for more updates. Thanks for watching, and keep navigating towards success.